Thanks for joining us here on the Professional Edge. Investing, what you might need to know is what we're talking about. And on this session, let's talk about investing in real estate. A lot of individuals think that real estate investing is going to provide them this passive income. They can keep their full-time job, get this rental house, interest rates are very low, and become a real estate millionaire. Well, being a real estate investor myself, there are some things you might need to know. And that is, number one, you got to protect yourself from liability. And you say, wait a minute, how does this apply to investing regarding liability protection? Well, being a tax attorney, CPA, certified financial planner, then we understand there is a risk component on this real estate that you, being the landlord, the owner of this property, can expose yourself and expose your car, your house, your brokerage account to the claims of this potential tenant. So that is one thing you investing in real estate need to make sure that you're covered with. And a lot of attorneys, a lot of financial advisors, the 1-800 firm you may be working with that manages your portfolio, they never address this. Well, it's one of the largest potential risks to your investment portfolio. So it's something you need to know. You might be owner of a condominium down on the Panhandle. You put it up for rent and you're owning it in your individual name. Well, what you might need to know is that if a tenant should unfortunately have an accident, we see this on the news here in Atlanta all the time, that one of the guardrails breaks or something else happens and there's a tragic accident. Well, if it comes to find out that the landlord, the owner of that property, is negligent, then there's going to be a lawsuit, and in comes the lawyers. And we know lawyers are after one thing, their clients' rights, but they're also after the money. So when we have this lawsuit and you say, well, I have property insurance to protect me from that. But if something tragic happens, you will exceed that policy limit, and therefore you will be exposed, your personal assets will be exposed to the claims of that creditor in that lawsuit. So again, investing, what you might need to know if you're an investor in real estate and you have that condo, you're renting it, you're holding a business out and therefore you have liability. So why wouldn't you isolate that liability? So therefore, if something tragic happens at your rental condo or your rental duplex or your rental home here in Atlanta, could be in Phoenix City, listeners here in Pennsylvania, even in California, you might even have some rental property. Isolate that liability to protect your other assets, protect your family from that potential claim of creditors. And the time to do that is now, not after the tragedy happens, but do it now. It's a cheap insurance policy. We put that liability wrapper around that individual piece of property, and that way your other assets are protected. So being an investor in real estate is another thing you might need to know. Isolate that liability. Got it. Now, what if you have multiple dwellings that you're having? Let's say you have 5 rental homes. Should you have 5 separate liability wrappers? I'm going to tell you yes, because the worst case scenario is you sign the deed over to the plaintiff and you give them policy limits and you're done. Your other assets are not exposed. The other 4 properties are not exposed. Now, some listeners are on the Professional Edge. They're doing their own type of liability protection planning. They go on the Secretary of State's website and form this entity. They think they're done. And wow, I deposit my checks in that new entity account. I'm good. Answer is no. What you might need to know is that's not really the effective way of putting this liability wrapper around that piece of property. We see people put their 5 properties in one entity wrapper. That, I think, is remiss again because A, do it right. And that's where working with a licensed professional that has done this multiple times to help clients with their real estate investing, and it's asset protection planning. So again, if you're a real estate investor, you have not done this asset protection planning, you have some liability insurance on your properties, you have multiple properties in your individual name, your rental condo down on the panhandle in your individual name, this is a wake-up call to give our office a call to do some liability protection planning. And you as an investor, it's something you need to know and take care of. And to start that process, give our office a call at 877-654-9798. That number again, 877-654-9798. So when we look at this investing in real estate, everyone wants to, receive this passive income. But if you're being honest with yourself, let's say you have the single family house, it's a 3-bedroom, 2-bath home, you're renting it for, quick math, $1,000 a month. That's $12,000 a year. We have some real estate taxes that we need to pay. We have some insurance that we need to pay. You say, well, I'm going to manage it myself. Okay, so that's fine. You don't pay a management company anywhere from 10 to 20%. Along the panhandle, if you have a management company, they're in the 25 to 35% gross rental. So it makes it hard to make a real profit on these rental houses. So we have, going back over it again, we have our real estate taxes, our insurance. We have any repairs and maintenance that you're going to have. Then if the tenant leaves the place in a disarray, then you may have to recarpet, repaint. So when you run the actual rate of return, you can read a real estate investment book and say, well, you only put $5,000 down and you got 95% financing. The mortgage that you pay is going to be tax deductible. All these other things are going to be tax deductible. And then you get this magic thing called depreciation. So therefore, you're going to be able to receive these rents and not pay any tax on it. That sounds all well and good. They give you the numbers and says, you get a 70% annual rate of return on your investment. This is where you need to go. Well, if you're honest with yourself, you got to also be putting back money for your roof, for your replacement of your appliances, the hot water heater, it's going to go out. So when you run the actual true numbers, then that rate of return is not really that 70% you read in these books. And the way these individual authors are making their money is they're selling the books or selling the investing in real estate classes. So again, investing, what you might need to know when you do real estate is, what are your true real numbers? What is your spread? Because if your property goes vacant for, let's say, 1 or 2 months, and you're not getting that $2,000, you still have to pay that mortgage and you still have to pay the insurance, to pay the taxes. So a lot of times, if it's a leverage financial transaction, meaning you're not paying for that house in cash or the condo in cash, then you actually have a negative rate of return. And therefore, are you actually getting ahead or are you going broke slowly? So again, we have numerous clients that have rental property portfolios that are integrated with their investment portfolio. You know, it's a diversification of their risk. That way the rental property is going to continue to pay them. If the stock market has a hiccup, they're okay. But again, it's running the overall composite of your investment portfolio. You have the single family homes, you have your condo down on the beach, you have your 401k, you have your after tax account, you have your safe money. You also may have some cash at the house, but all this works together for your risk profile on what you're trying to do and accomplish. So again, investing, what you might need to know is is your real estate protected? And is something happening on that going to impede or be tainted by your other assets? Again, if you're holding your rental property in individual name, this is your wake-up call to do something different. Again, we're just completing January of 2021. We have a New Year's resolution. Get some things done. Take some action. We're not all going out to movie theaters and concerts. So therefore, why don't you take a little bit of time during this COVID stay in place sort of atmosphere to get some things done, do the attention to details. So again, the rental property, if it's in your individual name, that's a wake-up call to give our office a call at 877-654-9798. That number again, 877-654-9798. Let's have a candid, confidential conversation and understand what we can do to help you protect your other investments from a potential claim from a tenant within your real estate portfolio. Now, the other thing we need to know about your real estate as an investor is, what can I write off? So, being a CPA, what can you write off? Well, we're trying to transfer these non-deductible personal expenses over to your rental property, your deductible expenses. So let's talk about your cell phone. Let's say it's $100 a month, and that's the number you list for your rental properties. You can take a business use percentage of that cell phone bill off on your Schedule E. That's where your real estate's going to go. So with that, let's say you use it 40%. 40% of $100 is $40 times 12 is $480. Let's round it up to $500. If you're in the 30% bracket, we just saved you $150 on your taxes. So just by listening here on the Professional Edge, candidly, could be on the podcast now. If you go to the podcast on Apple or Google Podcasts and you type in Professional Edge, you can listen to us there. If you can't fall asleep one night, put us on. I'm sure we'll make you go to sleep real quick. But again, just by listening here, that simple tactic of using the rental use of your cell phone, the percentage you're entitled to under the Internal Revenue Code, claiming that 40% for your rental property, now I just saved you $150 in taxes. So again, that's just one simple thing that we talked about here in less than a minute that saved you $150 in taxes. That is the very first year that you do this. So if you own this the next 5 years, that's a substantial savings, $750 on your taxes. That's one thing. The next thing which you might want to think about doing is having a mileage log on your glove box. Put that in there, and each time you travel from your house over to the rental property to show it, or you go to Home Depot, or you go to a plumbing supply store, paint store, whatever it is, write down your mileage, because each time you drive that vehicle, you get a tax deduction. Now, these are simple things you as an investor in real estate need to know. If you want to know more, give our office a call at 877-654-9798. That number again, 877-654-9798. My name's Todd, tax attorney, CPA, and certified financial planner. Host here on the Professional Edge. We're going to have more coming up on investing, what you might need to know.
With today's financial markets, are you getting the personal and professional attention you and your money deserve? Clients of estate management counselors benefit from having one set of professionals advise them on their tax, estate planning, and investment advice. We call that the Professional Edge. Todd is a tax attorney, CPA, and certified financial planner. With over 15 years' experience, he welcomes the opportunity to assist you in preparing for retirement, implement effective tax planning strategies, and to help you properly plan your estate. His radio show, The Professional Edge, is aired weekly on Sundays at 9 a.m. If you're interested in meeting with call his office at 877-654-9798. That's 877-654-9798. Do you want to feel more confident about making the right investment, tax, and estate planning decisions? Today, these decisions are more complex than ever. Have you thought about working with a professional advisor and not sure who to turn to? Not sure what qualifies one to be an advisor? Todd is more than qualified as a tax attorney, CPA, and certified financial planner. is with Estate Management Counselors. Estate Management Counselors operates as an independent fee-only investment advisory firm. They're dedicated to gaining a personal understanding of their clients' objectives and implementing professional counsel and advice to achieve those objectives. So take a second to talk with Todd to learn how you can benefit from their multidisciplinary practice where they coordinate their clients' legal, tax, and investment strategies into one comprehensive and integrated plan to enhance and protect their clients' financial security. You can reach Estate Management Counselors and speak with Todd by calling 1-877-654-9798. That's 1-877-654-9798.